Hi, I'm Kirk with Forex Strategy Secrets, and we're going to be discussing a long-term strategy that everyone can use. Now, this is kind of interesting. There are people that just say, "Well, I just like short-term strategies. I don't have time to do long-term strategy. Don't have the patience to wait." Well, we're going to hopefully share you some insights so that you can still do your short-term trading and do the long-term trading. Now, those people who do long-term trading, we're going to share with you some things also as to how to manage those trades, and it'll even get better as time goes by as to how that works. So everything that we're going to show you today can be learned, and you can learn it relatively quickly. And if you would like to improve your trading performance, then this webinar may be just the thing that you've been looking for. But this is what we all want to have happen. Make pips daily, keep those pips, and then be able to do that day after day. Just do it all the time. And learn how to do it in a short period of time. So let's go to some charts right off. Let's get into this long-term strategy that I've been talking about. Okay, first of all, we're going to show the long-term strategy on the nth degree trading system. So this is what you would see if you had our nth degree trading system. The first couple of things I want to point out to you. Well, all these indicators are momentum indicators. The bottom indicator is very powerful. It's lagging. It's the slowest one, but when it actually happens, it really is an indication of what's going to take place in the market. Many times it will forecast what's going to be taking place in the market. Right there, this is what we call a saddle buy. If it were on the bottom, like right here, you can see that's a saddle sell, meaning you may want to consider taking a sell trade there. Now this is a day chart, so it takes 24 hours for each of these bars to form, as you're aware, and sometimes that's hard for me to wait that long. So I like this as far as the direction goes. So this would be the direction you'd be trading. Another indicator that you would learn in the course material is right here at this point. This just became what we call a 5-alarm setup. This counts as two. One because it's the right color, once it's on the side of the line. This one is on the right side of the line, and this is the right color, and these moving averages are opened up. So that is a 5-alarm trade. And when you see those, then that's when you can start looking for heads up if you're looking at the day time frame. Okay, I'm going to put this anchor on here, and then we're going to first of all look right here and go to the 4-hour. Okay, what does this 4-hour tell you? Well, it tells you that you can see right here it's been going sideways, and so things are not totally set up for it to really make the move yet. So there's a couple of things you can take a look at. Is this sideways movement right in here, but how do you time that? What would give you information to set that up so you come back every 4 hours and look at it? Well, this is 1, 2, 3, 4, 5, 6. That's like one full day later is where you come back to have the time set up that you would possibly take a trade going in that direction. Let's look at that setup now. It has to be going the same direction as the day. Right now it's not, because this is below, this is below. So let's move it over here where we see possibly this one may not have to be a 5-alarm. The main thing you'd be looking for is it cross the zero line on this Mayo indicator. That's what we call this indicator, is a Mayo. And so that's not a 5-alarm, but it gives you the direction you're going to be trading. Let me show you one other point. And we'll do that by going back to this section. And we're going to put a line at that saddle buy. Move this over. This is not a 5-alarm trade, but if this is above the zero line and it shows a saddle buy, that overrides this being on the correct side. But there's a point that this has to be, or else it kind of makes it so it's not quite so strong. It's called off points. That's what we term it. You notice right here on this peak going up, this one was not as high as the previous one, so that's off point. This would be the peak or the point, and this is off points. You notice down here, this was the peak right here going short, and this turned, and this is off points going in the long direction. So either of those off points or crossing the zero line are two heads up things you want to look for. So when you see this as being red and this being off points, then you know that they're going the same direction, but it could be a counter trend trade. In this case, it was just going sideways and it was coming out of the trade. But right here, it's a counter trend trade. Off points, red, but this one's above and this one's just coming down. And you can see the market right in that same area was a little retracement, and then it takes off. So be aware of impulsive moves, corrective moves, impulsive moves, and then another corrective move. So what you're looking for is get in early on an impulsive move. So the off points is what I wanted to show you. And now we're going to move to this other section right here and go to the 4-hour chart and look and see about timing this move. So right here, this is where that saddle buy took place. Let me mark one other line. And the line is going to be when this crossed, when the Mayo crossed the zero line, and this is in an impulsive setup. Okay, now we're getting close to where this one on this 4-hour would say, hey, I want to go that same direction. So what do we see? We see another saddle buy or this fresh cross. So one of those two bars right in there would be a time when you could consider entering that trade. That's long-term trading. So you don't have to look at it every minute. On the 4-hour, you can look at it once every 4 hours. And then the other thing that happens is when you're at work, you don't have to be worried about too much because you get a nice movement going. You usually see it before work. You miss maybe one during work, and you can come back and see the other one, or after it's just barely been formed. So then the same thing happens when you're sleeping. You see one before you go to sleep, one happens during the sleep time, and then you see another one. So you can actually get things going, and once you know how to manage that, that's the long-term trade using the day and the 4-hour time frames. So that's what we have right there on that. Now, I want to show you something else. Now notice the indicators on the chart that I have right here. I'm going to go back to the day chart, and I'm going to show you the scanner. Okay, this is a setup for the scanner. What did you notice that was different? Well, the Mayo now changes colors. This off points is marked by being red. It visually tells you it's off point. You don't have to just see the height, but you can see the color. Sometimes they look almost like they're the same color, but numerically they are different. And we added a filter. This is an indicator that goes with our scanner. So we're going to talk about the N3 system, which we talked about. We talked about some trading, some long-term trade. Now let's take these same points that we talked about and see how the scanner comes into play. So I'll grab a line here. And what did we look for the first time? We looked when right here, this was above and blue, and this is blue, and this is above, and this is blue. So that was where we looked at that 5-alarm trade. Now is what we have. We've added another indicator. It also confirms, we call this a 4-bar. Now there are 4 bars that are not 5 alarms that are strong, but the 5-alarm and the 4-bar together makes that even really strong. So it's really going in that direction. So now let's look to see what the timing would be on the 4-hour chart. Now, what would we want to see here? We may want to see another 4-bar. Well, there was a 4-bar right there. It went a little bit in our direction, came back. We didn't really lose anything if we closed the trade, but then the big move started. So we could have waited until right in here, and that takes a big move, or this is still good right here. That's a 5-alarm with the confirmation of a 4-bar right there. And I'll show you something about this indicator in a little bit. Now we're going to go back to the day, and we're going to go right here, and what were we looking at right here? We're looking at this saddle buy. And then the other one we looked at was Maybe it'd be better if we waited till the Mayo crossed the zero line. And now let's look at the 4-hour. Okay, right here. So we see that same scenario. This would be questioning as to whether you'd want to take a long trade right in here when this is in a corrective move. But I want to show you one other thing that the filter does for us. When we see the Mayo and the filter turn the same color at the same time, we call that a Mayo filter. On the larger time frame, that's heads up. But this actually, look what happened up here. At some point in time, this started taking off. So now we go to the 4-hour. What did we do? We just picked up a big chunk of this trade in here. So say it was past that swing high area right there. There's still another 50, 60 pips in that trade. This filter gets you in sooner, and it can also get you out. Okay, let's talk about exit signals now as far as managing the trade. When these hot lines cross, these moving averages we call hot lines, when they cross, that's a heads up, or when this changes colors, that's a heads up. That would be an exit signal right in there. But what about having an earlier exit signal? Potentially right here, when this changed colors, you'd be getting out up in this bar someplace. So in this case, it might be 10, 13 pips, but you're not having to ride through this questionable area if you weren't there. So that is one exit signal. Now we got in earlier, picked up some more pips that we didn't even see before. Now we're going to go over and we're going to look at the middle of these three lines now and go back to the 4-hour. So this one, there were no signals that said to take a buy trade there. This filter kept you out of that, because what you need to have is the filter minimum, filter Mayo have to be the same color before you want to start getting in. Now let's go back to the day. Now we're looking at the third line. This all said go on the day. Let's look at the 4-hour. The 4-hour didn't say go right there. If you'd taken a trade, you would have been just fine. In history, we can see that. But let's look at this Mayo filter, same color. Now we're going to move this line over one. It actually becomes, we have three indicators tell us really early on, right at the dip, the bottom of this move right here, said, okay, it's going to continue to take off. And that was a really big move there. But look what we have just next bar. We have a saddle buy. This is not quite across yet. If you wait till it's a 5 alarm, we're right here. Now, we're only going to miss about 5 or 10 pips, maybe, in that range, but that can make a difference. The earlier you can get in down here, the more pips you're going to make up here. Now, when talk about another exit signal. Now, when the market's moving really good, sometimes you may not want to use this as your exit signal. If you did, you would have gotten out and you would have had 45, 50 pips. But what if this were running for a while? And look, this crossed below the zero line. Look where that took you. Right up in here is where you would have gotten heads up, time to get out. That's like 170 some odd pips. So what we're sharing with you here is the Norwood Strategy Scanner. We're taking strategies and scanning them. So you wouldn't even get a signal until this day bar lined up and the 4-hour lined up. So you wouldn't be getting signals in here, fake signals. It would be right over here where you would possibly get your first signal. We have a couple that in one of those two bars you would be getting signals. I'm going to share something with you that is not available right now, but it will be available shortly. It's almost, it's well into its programming. So we're thinking in the next 2 or 3 weeks we'll have this tool. It's the management tool. So then you could set it and say, this is really going nicely. I'm going to have it close when it sets, when it crosses here. or when it changes colors here, or I just want to, it's really going nicely, so I'm going to wait until it crosses below the 0 line, and that's when it would stop you out. This would be your trigger to close the trade. And we saw where that was going to take us clear up in here. So nice trending moves, and that's what we have coming up. So you have an entry tool to give you heads up, to bring these things to your attention, not have to come back to your computer all the time, but it brings them to your attention. So you're a short-term trader and you have time to sit in front of your computer. Well, you can have these things sent to your phone that say, hey, go back and take a look. You look at it and like it. You take the trade, then you can manage it and actually take advantage of these trades. And during that period of time, there's a lot of short-term trading that you'll be doing. Then you can trade there as well. Take additional trades in those directions and trade many more currency pairs. Now, this is just one currency pair. There are many currency pairs that you can have brought to your attention at any given time. The scanner will bring more trades to your attention than you can manage. So what I do is, see right here on this US yen, from there above, these are the pairs that move the most. Those are the pairs that I usually trade. I'll trade these if someone else brings it to my attention. Because we have a PIP club and other traders are trading these, and they'll say, what about? And then they tell me about it. And I say, and I go and look. So I would click here on this Aussie New Zealand, for example, and I would say, oh, I like what that's doing, and take a trade there. It doesn't mean there are not good trades down here. It's just that I get so many scans that I just limit it to those that move the most. So for the time involved, I can make more pips for the same effort and have my capital working for me on those that are giving me the biggest return. I'm going to share with you quickly so you can, if you like what I just said, you can do this. Anything that has the pound pair in it, the euro pair in it, or the yen pair in it are those that I trade. The one exception is the US CAD. It moves pretty well also. A big favorite that I don't have is the Euro US. It doesn't move as far right now as many of the others. So if you were to see that, someone brought it to my attention, yes, I'll trade all these pairs below, but they're not the ones that I'm having scans brought to my attention on. Right here, we have a list of currency pairs that I trade, and I have 5 strategies that I have checked. See, look at all these different strategies you can take advantage of. Now, there's a lot of day strategies, 1 hour, 15 minute. Here's even one on a 30, 15, and 5 minute for the short-term traders. So most of these are pretty much the same, everything, but they're just different time frames. Right here is what I've been talking to you about, is this long-term strategy right here. This is another long-term strategy right here. I have all these set even on the short term also. I'm going to show you this one now. I'm talking about the long-term one. This is another long-term one that has been really fantastic. Then we talked about some other things that can be brought to your attention. We talked about the male color change. This is marking the off points that we talked about. Male cross, that's when it's crossing the 0 line. So these are all things in this scanner that you can say, when this happens, this is what I want to have brought to my attention. And there's the 4 bar we talked about. Remember we talked about saddles, saddle buy, saddle sell. It will bring it up to your attention when there's a saddle, either a sell or a buy. It'll bring it to your attention and tell you which one it is. You just have to pick the time frame. So if you were looking for a saddle on a day, click on it, and when it brings it to your attention, you know that happened. So it may not happen for 5 days or 10 days, but when it hits, then you're ready to go. Remember we talked about the 5 alarm? This actually brings a 5 alarm trade to your attention. And there are several other things that you have access to. So I just have these 5 checked right now. So that's what the scanner will do for you. It'll bring all these things to your attention. Now, I said I was going to look at this other strategy. Is what it involves is the male and the filter on the 3 time frames on the larger. If I want to get to this 1 hour, 30, and 15, then I do a little different criteria here on the 15. I want it to be more restrictive so that it's got to be a higher probability. But the day, 4 hour, and 1 hour are really good, or the 4, 1, and 30 minute are really good. So that's what we're looking for. Now, it can have more colors, but it has to have at least this black and that blue. That's the male and the filter. It's called a male filter. I'm going to move this over. We're going to pick another one. This is a male filter, even though it has a red up here. Now, we talked about this area. Let's go back and look at another one. Is this a male filter? No, it doesn't match up, so you're not going to be taking trades in there as far as heads up. And you want them when they're fresh. See, there's a male filter. Now, you notice that this happens to be a 4-bar. It has to be a fresh cross. This doesn't happen to be a saddle buy. Also, so those are trading time. Now let's go back and look at this choppy area right here. Now this is on a day chart. So from the bottom here to the top is over 200 pips. Good trading to be had in here. So let's have the day tell us when the setup might be good to start looking. Male filter happens to be an early bird filter as well. And so that's heads up. Now let's go to the 4 hour and 1 hour. So remember, it just has to be a male filter. Go to the 4 hour. Is it a male filter? No. So we have to wait until it's a male filter. So that scan kept you from even getting signals right there. Now we go to the 1 hour. It has to be a male filter also. Is it? Yes, it is. So you get heads up someplace on this bar. It is only about 10, 12 pips long. So if you'd gotten it and it went a little bit against you, don't worry about when you're using these larger time frames. 10, 15 pips against you is not really that big of a deal. So there's one. You would have received another signal, right? You wouldn't receive one right here because you already had a signal. So it has to change colors, then goes back in. So you'd receive another one right here on that 1 hour. So let's mark that 1 hour and see if the 4 hour still matched up with that. Well, it's still in that 4 hour period. So yes, the 4 hour still matched up. And of course, we know the day was going. So you can get several signals going in these nice moves, and it filters you out of these types of moves. You're not going to be, if the day is going long, you're not going to get any of these short signals at all. And you may get one that does go long. I'm going to mark one and just then go back and test it. There's a male filter right there. Happens to be a 4-bar as well. Did the 4 hour line up? No. The male is okay, but the filter wasn't. So that would have kept you out. That's why you wouldn't have seen that trade at all. Let's see if the day even would have given you a signal there. The day would not have even given you a signal there. So see, it keeps you out of those moves right there. The male filter is a really strong strategy. So that's a long-term strategy as well. So I've shared with you 2 long-term strategies. One where the day just had to be the color change, but the 4 hour had to be something stronger, and it had to be at least a 3 or 4 bar to get you into the trade. Okay, let's go back to the PowerPoint presentation. So we went to the charts now. Now we're back on the PowerPoint presentation. So we've shown you a very small look at the Nth Degree trading system and the Norwood strategy scanner, the 2 things working together. The things I've shown you are just a glimpse of the tip of the iceberg. So with the Nth Degree and the Norwood strategy scanner, using this long-term strategy, you'll be able to become a more disciplined, mechanical, consistent, confident trader. Discipline means you let the tools do the work for you. You still have to make a decision. You will get scans that you say, I don't like that scan. That doesn't look right to me. It's not fresh. So we've only seen a small look at the potential of the nth degree and the strategy scanner, but we also have a PIP club. And this is where you can attend and you see traders take trades while you are learning. And you can follow along if you'd like to take the same trades as well. So here's what we have for you. We have the nth degree. It's a proven trading system. It's been around for 8-9 years. And there are hundreds of people that are saying that this has turned their trading around. So it's not like it's brand new. The Norwood Strategy Scanner has only been around 4 or 5 months. And so we have those, and we have the PIP Club. Now, we're going to make you an offer here, but if you take advantage of this offer that we're going to share with you in the next 3 days, you're also going to get our Fibonacci course. You're going to get a 1-month subscription to the Norwood Strategy Scanner, and you're going to get 4 sessions, 15-minute sessions in the group coaching sessions where you can ask questions. You can about the scanner, about the nth degree course material. We can coach on some things, show you what we're doing, and so you get all of this at a value of $1,897. If you were to buy all that stuff individually, that's what you'd be paying for it. But if you do the next 3 days, you get all of this for $697. That's the course material, the Fibonacci course, a 1-month subscription to the scanner, and 4 coaching sessions. So here's the link. If you like what you're seeing, write this link down. You can't copy it, you have to write it down and paste it in the browser, click on it, and it'll give you the order form to take advantage of this material. I'll come back to this, but you can contact us at jet@forextradingsecrets.com, or you can call us and ask questions. If for some reason you receive this email and you have the course material and you want to have some of the other things, let us know. We can share some things with you on that you don't have, that you don't need to buy the course material. So I'm going to leave the link here. Just want the subscription to the scanner. The monthly subscription is $100 a month. And when that stop portion and management tool comes out, that is part of that $100 as well. Right now you just have the entry signals, but you don't have the management portion of it. Yes, if you want to subscribe to the scanner, you can do that without taking the entry course. That's just $100 a month. This is what you get a template that comes with the scanner that you would have all these indicators showing, and then we have videos to show you how to use each of the strategies. There's still some things in the course material that you would miss out on, but we're having people tell us that it's still working well for them because the scanner is doing the work. And as soon as you stop paying, the template goes away and you don't have the indicators. Here's a trade that I have on. This is a 4-hour. Let's look to see if this criteria is met on this. So let's even go to the day to see what the day says. See, the day is not telling us to go long. The 4-hour, this is kind of a retracement, and so I figured there was some move in here. The 4-hour has, right now, it was just a male filter, but it's now a early bird filter, which is even more confirmation. Okay, let me tell you one little feature about the stop that I'll be so excited about this part, I can't hardly contain myself. It has an automatic trailing stop. You can use that, or you don't have to. It's not like you have to turn on all the time. But let me just use some lines here. I have my stop down here, whatever point that I had it sitting. As soon as this started moving above that 0 line, profitable, it's up by about 19 pips now. This automatically starts moving up, trailing behind it. So it'd moved up, whatever that 19 pips is, it moved it up. So in the event that it comes back against me, then I would lose less. I think I had a 40 pips, so this stop would even be up this further. So if it came back against me, I would lose less. And one thing that we had someone share with us, we were thinking about the concept, but this individual shared with us the numbers on it because he was using the same concept also. He said that if you had a 10 pip take profit and a 10 pip stop, for example, now he was thinking of using smaller time frames. As soon as that started going profitable, that moves it from a 10 pip stop to a 9 pip, 8 pip, 5 pip stop. Then if it comes back against you, you only lose like 5 pips. He says on average, the losses will be about 5 pips. The wins will always be 10 pips. That's without you doing any more management, just letting it hit take profit. And as that stop hits the break-even point, it's actually taking you out of the trade, but you would lose less. He said you only have to win 30% of the time to break even using that technique. He says, but let's take it a step further. Let's let the 10 pip stop, but to have a 20 pip take profit. There's many trades that go way beyond the 10 pips. So as soon as it hits 10 pips, you're at a break-even point. And then if it comes back against you, you haven't lost anything. Or if it went 9 pips and came back against you, you lost just 1 pip. But when you win, it'll always be 20 pips. And so you lose an average of 5 pips and gain and win the 20 pips. So that he said even. And then there are other scenarios that we'll share with people as we get going. But that's a concept right there that the management tool is really going to be a value, is to having the stops. There's a link if you want the course material, and or contact us if you want just the scanner without the course material. That's available also.